So but we want to do a little of multi time frame analysis or top down analysis. Let's look at this place. Let's find one Sunday candle here, because this is daily candle. Today is this is Monday. This is Sunday. This is Sunday, right? Okay, this is Sunday. Let's count 7 candles back, because every weekly candle contain how many daily candles? 7 daily candles. Let's count it back. This is 1 2 3 4 5 6 7. Exactly. Okay, this is 7. This is 7 day now. Is it also Sunday too? Okay, that is Sunday. Okay, for us to know the open and low of this candle, we started from the previous week, that is Sunday. Look at the opening price of that day candle. The opening price of that day candle is the opening price of the weekly candle, because that's the candle that started the new week. In this is the new week started from Sunday, not Monday. Started from Sunday, right? So this is Sunday, May 26th. Let's mark it. That's the opening price of the weekly candle. So what is telling us, it pushes up first. Open high. This is a bearish scenario. Open high, low, close. Where is the last candle? Okay, 1 2 3 4 5 6 7. Okay, here like this. And where is the opening? Where is the closing price? This is the closing price. How many 7 days? How many daily candles in weekly candle? Let's count. 1 2 3 4 5 6 7. Can we see it? Now let's mark the week. It means the week will be like this. This is the highest high it go to within this weekly window, and this is the lowest low it gets to. Okay, what I just did now, I have marked my weekly candle like this. I don't need to go to MT5 to go and find out where the opening price is. I've marked, that is exactly my weekly candle, and you can see that my weekly candle has 7 days, what's it called, daily candle inside, because this is daily time frame now. Let's mark the daily candles too. We want to do a deep multi-time top down analysis and multi-time frame analysis. This is the first. Let's mark the opening price and the closing price of it. You can do this as well, even though on your phone you can do this. Let's mark the opening price of these two, of that daily candle. Yeah, we want to know the opening price of our daily candles and the opening price of the weekly candle as well, right? Let's mark their bodies, because it's the body that will tell us the. If we didn't mark it from daily candle, when we go to 4 hour now, we won't see where it actually opened. But marking it in daily like this will give us a kind of guideline when we get to the 4 hour. And still, let's mark their open prices. The open price, okay, this is the opening price of the weekly candle. It open here, it closes here, right? You see the body of the weekly candle. I hope you understand what I'm trying to. Oh, okay, still let me use it. Okay, this is the opening price of the weekly candle. Let's name it week 1 weekly candle, so that when we get to, be patient with me, I'm heading somewhere. You really need to understand this. You really need to understand this. Okay, the weekly, you don't want to type what's happening. Okay, let me just name it G. Let me give it G. That is the weekly open. That is the weekly open. Then others too. Let me that is the weekly open. Let me mark daily with what? Thin line. Thin line. Daily opens with thin line. Let me mark daily opens with thin line, so that we know where there is major reaction, where there is minor reaction, and where price want to reverse from. Let me mark all the daily opens with thin line. I hope you can see this. All these thin lines are daily open now. All these thin lines are daily open now. This one has been mitigated. Another daily open here, right? Then another daily open within that weekly candle. Within that weekly candle, another daily open here. Yeah, those just 1 2 3 4. Okay, This one has been mitigated. There is no need for us to mark it. The ones that have not been mitigated, that's the one I'm marking. Any other daily, okay, this one did not even show at all. So I have marked all the institutional levels that price can react to. This is daily time frame. Let's go back to 4 hour and see something. Good. All right. So now we are back in 4 hour. How did those candles react to those levels, right? I said when a pro trend is moving, a 4H pro trend is moving, do not assume it's going to change direction until it gets to the weekly open, right? Now at the same time, I said do not trade a candle that has already tapped on what's it called, that mitigated weekly open or daily open. Why are you not going to trade a candle that tap on daily open? It's likely going to react because it is a strong reaction level. If it's a bullish trend, the previous price action is a strong reaction level because these are the places where major reaction will start. When price was moving here, we are using directional candles that price come back to, we buy. In this place, there is no any daily open here. Look at the first daily open we just marked now. Look at the daily candles we mark. How many 4-hour candles are inside it? Right? 6. 1, 2, 3, 4, 5, 6. We can see it is 6 daily 4-hour candles inside one daily candle. The next one here, how many? 1, 2, 3, 4, 5, 6. We did not draw their wicks. That's why you didn't see what's it called, that part. How many here? 1, 2, 3, 4, 5, 6. So we have 6 4-hour ones inside of daily candle, and the weekly candle itself. How many daily candles inside? 1, 2, 3, 4, 5, 6, 7. 7 days in a week. This is the weekly open. When price tap on the first daily open, what did price do? Did that candle hold? No. All the directional candles before then were holding, but the moment it tapped on the daily open, it gave a minor reaction. That's where the minor reaction started. The moment it tapped on daily open, of course these reactions too, they are visible. Probably these are in reactions to 4-hour candles here. They are open prices, but the one that is significant is the one it tap on the daily open. You can see that despite the fact that it is a directional candle, it did not hold. The opening price did not hold. I hope you can see here. Look at where my cursor is. This candle tap on daily open and it did not hold. So when a 4-hour candle tap on daily open, right, you have to mark your institutional levels. Expect a reaction. So do not trade its opening price by them. Wait for the reaction leg to end, and that's why we wait here. And when the reaction leg end and give us a new institutional and directional candle, we now start our journey from there. Going up, the next daily open is here. When price tap on it, it come back, it reacted but still did not hold, and a major reaction started from there. Are we together? And a major reaction started from there. A major reaction started from there. I hope we can see. So a major reaction started there, and it continued to move down until it sweep the liquidity, because that is a major reaction. So the next daily open is here. Okay, this one price was actually able to flip it. It didn't show any significant sign of reaction here in this little. Probably maybe it has already been mitigated previously. Maybe price come back to it and tap. Yeah, we sell from it. It has been mitigated before. Yeah, you can see price come back to it and sell. But the ones the price did not come back to and sell, you can see that they react significantly. But this one price have come back to it and sell. The next one was the weekly open. So price actually shifted structure. If price did not shift structure, this weekly open supposed to have what? Hold price, because from our knowledge of what's it called, open high, low, close, our knowledge of open, high, low, close, our expectation should be that when this weekly candle open here, open, right, high, that is the weekly open, it go back to the weekly open, the previous candle weekly open, it will find resistance level, then continue with the bearish trend, right? But here there's a change of structure, a change of character actually. So the only time you assume 4H is about to change character is when it gets to the weekly open, not the daily open. Daily open will be a major reaction only. This is top-down analysis we are doing now. I hope you understand this. So open high from the weekly open because it is a bearish move, then we expect a pro bearish trend to continue. But in this case, there's a change of character, so that's why it only give a sign of reaction, or did not even reacted at all. Then, or it gives a sign of reaction because even despite the fact that it pushes up, it still come back and react. All right. Then price attack the next daily open, and definitely it give a reaction. It give you a reaction. It gives you a reaction. All right. Before it breaks, and as it breaks, then before we think of it changing structure now, I mean a change of character is when we see the next weekly open up. Before we can think of it changing structure again, is when we see the next weekly open. All right, let's form one weekly of, or let's look at this place. Maybe you can see one weekly candle, form another weekly candle and see how open, high, low, close also relate to top-down analysis. There, the same way we do it for this. Okay, we have to go back to the daily time frame. Let's go back to the daily time frame quickly. 1440. Okay, so we count 7 days candle from where we just stopped. 7 daily candles. All right, this is 1 2 3 4 5 6 7. This was the previous Sunday. We can see that was Sunday, May 26th. So 1 2 3 4 5 6 7. This is the last candle. The next Saturday, then this one will be included. This is the opening price of it because it was Sunday, like this. Yeah, so that's the body of that weekly candle. The lowest low it come to is here, so that's the week. This is the week. All right, it means the opening price was open, low, high, close. Look at the opening price here. This is the opening price, and see as we are going up, price come and test the opening price of it. So I hope you can see it by yourself now, how it is sweet to do top-down analysis with your open, high, low, close. Price come back after reacting to this daily time frame, a daily opening price. It pushes price to find support from the weekly open. We're in the daily time frame now. It pushes price to find support from the weekly open. Let's go to 4H and see the candle that finds support there. This is forward time frame now. We can see the candle that tag on our weekly open, the candle that we just drew, the weekly candle that we just drew. Look at open, low, high, it closes here, right? It closes there, it closes there. So that's the weekly candle, because on derived trading view, the highest time frame is daily, but we can use your knowledge of candle composition to actually come up with the weekly candle, because every weekly candle contains 7 daily candles. So we take it from Sunday to Saturday. From Sunday to Saturday. Sunday is the first day of the week in synthetic indices, not Monday, just like currencies. So the price, when it reacted to the daily open here, the one we marked previously, then it come back to the weekly open. So when 4H is moving as a pro leg, a pro trend, right? It's when it only gets to the weekly open, you can now have the what's it called, be skeptical about whether it's going to reverse or it's going to only react, right? So in that scenario, whenever any forward candle tap on the weekly open, do not trade its opening price. Whenever a candle tap on the daily open, do not trade its opening price. Daily open, weekly open, daily open, weekly open. I hope you understand this. It's one of the checklists we're going to look into now. We're going to look you will write in your journal that whenever a candle, even though it's a directional candle, once it has tapped on the daily open or weekly open, do not trade this entry price. And look at what happened here. Despite the fact that yeah, it's only key state, so it is a zone actually. Look at the candle. Now that it has tapped on the daily open, the opening price, instead of it to continue with the bearish move, it invalidated, and once it has invalidated, it gave us a directional candle. It means the bullish move is ready to start. The bullish move has set in, and every other move there we keep on buying. I hope you understand how to do we just did a bit of multi-time frame analysis, right? We did a bit of multi-time frame analysis, but with the mere understanding of candle composition, with the knowledge of open eye close with regards to how candle move, right, you should be able to do multi-time frame analysis. When you sit down and think open eye look close, open eye look close, every candle is expected, if the trend is going to continue bullish or bearish, so they should respect their open prices until it gets to the weekly open or daily open. These are areas where we expect reaction to occur. Daily open, major reactions. 4H open, minor reactions. Weekly open, we expect reversal to continue with the pro weekly trend. If the pro weekly trend is bearish, it will continue with pro weekly trend. But if there's a change of character, of course, it's going to invalidate it, just like in this case. All right, so this is how to do multi-time frame analysis. I think this video should be over 2 hours now. Let me round up